Hello, folks. It is Tuesday, February 13. It's about 8:45 on the west coast of the United States, which is where I'm at these days. Still living in a hotel and in a different hotel today. If you look, that's the ceiling over my shoulder there. The ceiling in this room is painted. It's a sky scene, clouds, blue, birds, etc. And so anyway, that's not dirt, it's paint. And it's not mold, it's paint. So anyway, let me share my screen here and we'll get started. What I really want to talk about, or what the focus of this video is, the U.S. Debt Clock website. usdebtclock.org is a very interesting tool. Lots of information going on here. My understanding, the background on this tool is somewhat unclear. Not sure who is producing this website. I haven't dug into it personally. Some people believe that the Q organization, Q movement, if you're familiar with Q, that some messaging, Q-related messaging, is produced through this website. And that was the real key of what I wanted to share with you by looking at this website, is that if you click this secret window, and this is not always here, this application changes from time to time. And so anyway, this caught my attention. In this secret window, what they are suggesting on the left here is old money. These are the Federal Reserve notes that we are familiar with. Note 1913, that was the founding of the U.S. Fed, to 2024, which of course that's this year. Old money, perpetual debt, interest, wealth extraction, etc. So anyway, old money and then new money. And obviously, based on the suggestion that old money ends in 2024, that it would be replaced by new money. Notice that the color of the new money is gold, and then we're showing a 1964 silver dollar. And of course, 64 was the last year that our mints produced real money, physical silver for circulation. And so anyway, just wanted to make sure that you are aware of this website, and that there are features on this website that could be messaging from Q, but you have to kind of poke around and look for them. Some of the interesting fields on this website, here's dollar to silver ratio in both 5-year and 10-year. Got $1,500 an ounce, $1,100 an ounce. At either of those prices, I'd be a happy camper. A bunch of us would be happy campers. My real target for silver is $600. I believe that before all is said and done, we will see $600 an ounce silver. Now, the world in which $600 an ounce silver exists will not be pretty. We won't be happy campers. We're not going to be, oh my God, I'm a gazillionaire, let me go buy a yacht. Basically, we will have preserved our wealth in physical silver. The fact that it's worth 600 US dollars, well, who really cares? Those dollars are worthless, So anyway, so that's interesting. Similarly, for gold, we can see 5-year and 10-year, $12,000, $9,000 an ounce. Anyway, just a lot of information on here. Another two interesting fields here. If we look at this paper to silver ratio now, 391 to 1. And what this field is showing us is how many ounces of paper silver have been sold for every physical ounce of silver that actually exists or exists within the LBMA and COMEX environments. And this is the idea that they are selling paper. They're selling far more paper than they have physical to back that paper. So, almost 400 people think that they own the same ounce of silver. Well, obviously 400 people can't own the same ounce of silver. So Houston, we have a problem. Same idea in gold, the ratio is 120 to 1. So 120 people believe that they own the same ounce of gold, which, of course, that can't happen. And if you can wrap your head around the idea of somebody, the futures markets, COMEX, LBMA, etc., have sold paper ounces of silver and gold, well, it's not hard to extend that idea, the same idea, to the stock market, shares of stock, which, of course, back in the good old days, you bought 100 shares of IBM or whatever it was, you got a physical certificate that showed that you owned those shares in your name. Well, that's long gone. What we have today is the DITC, DTIC, what is it? DITC stock shares, DITC. So DITC it's essentially a clearinghouse for Wall Street securities shares. And so if the organizations, financial organizations, are able to sell paper silver and paper gold that doesn't exist, well, why can't the DITC or the Wall Street firms that sell shares of stock, why can't they do the same thing? Now, who's to say that there aren't 300 people out there who all think they own one share of NVIDIA, for example? That's a hot stock right now, one of the Magnificent Seven. But there's nothing to prevent, with the current settlement system through the DITC, there's nothing to prevent selling the same share of stock multiple times. One share of stock gets sold to multiple investors. I'm not saying that that's going on, but there's nothing to prevent that. Well, yeah, we have laws and morals. If you're the kind of person, the kind of human being that believes in laws and morals, but I would suggest that that's not the case these days for most people who are involved in Wall Street financial organizations. Certainly not the case for our political class. The 1%, the elites, as they think they are. So that's an idea that I play with from time to time. And then a new idea recently for me, fairly recently, they could be doing the same thing with the money supply. They go down into the basement to print up $100 billion worth of Benjamins, $100 bills. What stops them from printing an extra billion or an extra couple of billion and putting it into circulation or using it for whatever nefarious schemes they need money for, physical money, but not report that money in the metrics where we're looking for, M0, M1, M2, etc. And so anyway, in the paper financial world that we currently live in, the possibility exists for a lot of paper to float around that is backed by nothing. And of course, that's, fiat currency is backed by nothing other than debt, empty promises. So anyway, interesting world. So that was my main point in this video, was to make sure that you're aware of this debt clock, usdebtclock.org website. Big moves in the markets today, primarily, I believe, because inflation came in hot. And I should put air quotes around hot, because if you are paying attention to the big picture, you understand that inflation is high and will remain high for a long time to come, and is headed higher. I mean, inflation is already high, and that's before the Fed and the Treasury prints another 10 to 12 trillion dollars worth of new money, which of course will feed into inflation. I hope that we don't end up in a hyperinflation environment, but that's certainly a possibility. Another 10 to 12 trillion gets created and ends up circulating in the economy. We're going to see some serious inflation. But for the last couple of months, part of the narrative, if you believe the narrative that the talking heads spout on a daily basis, inflation has been not necessarily tamed, but greatly reduced. The circuit master's cracking his whip and the lions are behaving. It's not the truth, but that's been the narrative, and that's part of why the idea that inflation has been taken care of was part of the narrative of how and why the Fed was about to pivot on interest rates. Is okay, they've conquered inflation. Now we can go back to lower interest rates. Well, they haven't conquered inflation. And so anyway, a report like this comes out, and the markets react. Markets react big time. The only source for accurate information on inflation, what I believe and consider to be accurate, is John Williams' website. It's shadowstats.com. That's what we're looking at here. And if you go to his website, it's under alternate data, inflation, and you'll wind up on this page. There's two charts on this page. The top one, this is John Williams tracking inflation based on the 1990 methodology that the BLS used. And so based on the 1990 methodology, inflation, true inflation is, what is that, 7.5%, something like that. Whereas, the BLS wants us to believe that it's 4, actually, a little bit, I think 3.5, actually. And then the second chart on this page, this is 1980 methodology, BLS methodology. So John Williams is using the same methodology that the BLS used in 1980 to track inflation, and he's currently showing it at about 12%. And I believe, based on my own experience at the grocery store, at the gas station, paying for it, health insurance, you name it, rent. I'm currently, living in hotels and looking for rental housing. 12% inflation feels more accurate than 4% or 3.5%. That's just another cooked number coming out of BLS. My point is, if you focus on the big picture, you look for accurate sources of information, you don't get surprised by hot inflation reports coming out of the BLS, because you know that inflation is already high and will remain high and is almost certainly headed higher. Hopefully not not too much higher, but we will see. So just let's look at a couple of the big moves today. The US dollar, obviously, big jump. And this big move for the dollar, three quarters of a percentage. Yeah, 0.75% in one day. That's a big move in a currency. From a technical analysis viewpoint, it's interesting in this chart. Once we have identified a support and resistance level, the reason I keep extending those well-defined levels, I keep extending them to the right because they continue to act. Price continues to react at these well-defined support and resistance levels. And see, we could define this level all the way back here. Resistance, resistance, breakthrough, support. So as far back as, that was August of 22. We've identified this as a support resistance level, and then, price continues, or the US dollar in this case, continues to react at that level, whether it's, testing the level from below as resistance, testing it from above as support. Here we are again today. This price bar, topped exactly at that resistance level. Note that this is a large bar, wide-ranging bar, which is impulsive, suggestive that high energy, likely to move higher. This uptrend is likely to continue based on this impulsive price bar. Another factor that makes this a impulsive price bar is the fact that price closed nearly or exactly, where's it at? The high is 104,855 and it closed at 104,850. So almost closed at the high of the day. And so that's another factor that lets us say that that bar is impulsive, high energy movement in the dollar. Now, we also need to keep in mind that based on MACD, the dollar is becoming very overbought. It's pushing up into these prior MACD peaks where the dollar, ran out of energy and then headed lower. So perhaps we're approaching a level where the dollar will turn around and head lower. But I'd be looking for some more upside action in the dollar in the short term. Yield on the 10-year note, I suspect, and again, another big move. This is 3.48%. Big move in interest rates, yield on the 10-year note. I suspect this is the market's, at least in part, this is the market reacting to or accepting the idea that the Fed is not going to pivot. Because as long as the Fed can pretend to be fighting inflation, they aren't going to pivot on interest rates. And I say pretend because they aren't trying to fight inflation. If they were serious about fighting inflation, they would have to take interest rates above the level of true inflation, which means, we'd have interest rates 14%, 15%. I've seen people talking about 20%. Anyway, if the Fed was serious about fighting inflation, they would put interest rates well above true inflation, and that would that would definitely have an effect on the financial markets. So that's all I've got for today. Let me see. I'm trying to do shorter videos. We'll see how this one turns out. So hope I've provided some value for you folks. Let me stop sharing and end this video, and I will babble at you some more tomorrow. Have a good one.